Hello from Trend Signal for a review of the data and events the week beginning the 21st of January 2019. Just a reminder, it's a federal holiday in the US on Monday. If you're listening to this on Monday, Martin Luther King Day, so markets will not have the US markets to stir things up as usual around midday, so a quieter day with a little less liquidity. On Monday morning, markets were a little bit lower to mixed, partly due to Chinese GDP data and partly due to the lack of progress in the US government shutdown. Just looking at the FT, just get it open. Actually, go to the home page, might be more relevant. That's probably where they'll have it. There we go. The headline: China's economy grows at the slowest annual rate since 1990. Don't be too alarmed. That's pretty much what it was expected. 6.4% in Q4 was expectation. That's where it came in, leaving the annual rate at 6.6%. Poor data, yes. The worst since 1990, yes. But to be honest, it was expected, and it was offset by more optimism about recent stimulus package announced on Friday, and just general steady markets last week across the board, really. They may still react more negatively when the US comes back from the Martin Luther King Day on Tuesday, but time will tell. There are negatives around. There are warnings from the Federal Reserve that this prolonged shutdown of the government will likely impact growth later this year. Again, we're not going to know about that until later this year. Markets last week, stock markets did pretty well. Risk-on mood really persisted all last week as stock markets continued their recovery. As investors resurrected this TINA, there is no alternative as bond yields remain subdued. There are alternatives, of course, but stock markets doing well. Positive news China trade war helped lift shares Thursday. Reports come out that Steve Mnuchin, the US Treasury Secretary, was going to scale back the tariffs on Chinese imports. I wonder if he's checked with his boss. I'm not sure he'll agree with that, but there we go. Analysts believe that the two parties are closer to agreeing a deal that would involve China significantly increasing the purchase of US goods over the coming year. Yeah, well, again, I know Mr. Trump will want absolute clarity on that one. But the mood in equities was actually further helped by news that China had injected fresh liquidity into the banking system, as I mentioned earlier on. In terms of currencies, the dollar tracked higher all of last week, really, as it followed the improving equity market, whilst at the same time, I guess other G7 economies wrestle with their own problems, which is one of the reasons why the dollar was doing all right. Gold down $6.50, 0.5%. That's really reflecting a more subdued global macroeconomic backdrop, whilst the stronger US dollar also took its toll on precious metals. Brexit, well, we don't want to spend too long on Brexit, but it just gets more ugly. Theresa May's deal was smashed out of court. Sterling recovered, or at least rallied on the back of the news, because it now makes a no deal less likely. I don't know what it makes more likely, though. Useless Corbyn, as some people have called him. His only response was to call a vote of no confidence, which was so predictable, and actually gave a chance for the Tories to unify for a while, at least for a while. So Corbyn refused to meet May. May refuses to give in on her red lines. Brexiteers are worried Parliament will try and hijack the whole process. If May agrees to removing a no deal off the table, cabinet members will walk. There you go. It's just, and so on and so on and so on. It's a right old mess, and it may well culminate in either a new referendum or even a general election. The latter, can't understand why the latter would work, because it would delay the whole process by months, as government has to shut down for 4 weeks till now the election to take place. How did we get ourselves into such a mess? I think maybe because we're completely split down the middle is a good answer to that one. For data and events this week, we've already had the Chinese GDP as discussed. Bank holiday, we have talked about that. Martin Luther King Day today, so federal holiday in the US. Tuesday, we have UK average earnings. Perhaps a continued pickup there would be nice. It is the start of the Great and Good gathering in Davos, Switzerland, the ski resort in Switzerland, without Donald Trump and without a US contingent, as it were, but so still with the world's great and good, someone said. A closed talking shop that it's been described as by the press, because the press are not allowed into any of the events, but they hover around the town interviewing people where they can. We don't expect too much from this, though. The first of the two central bank meetings this week from the Bank of Japan. When did they last change their monetary policy? No change in rates. I could almost write these notes for the rest of the year. Thursday, more interesting, we've got the European Central Bank, the ECB meeting. Slightly worrying times in the Eurozone as growth seems to be faltering. Italy notched up a negative GDP in Q3, so potentially they will be falling into a technical recession if they post, as expected, a negative fourth quarter GDP. Germany as well. German exports to China have fallen very sharply, pulling the economy down with it. So all is not well. It'll be interesting to hear what is said in the press conference by Mario Draghi, and that takes place at 1:30 on Thursday. Friday, data free. That's it. Thank you very much for listening. All the best. Have a good week. Bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.